If you're thinking about buying a house in today's market, you've come to the right video. I'm going to be talking about the importance of pre-approval letters, why you need them, and why they're so important, and why you should be focusing on that first before you start shopping for your home. So make sure you stay to the very end of the video. We're going to break down the entire pre-approval process, and let's hop into the video. So for a lot of people, when you start your home search, you get so excited, which is totally natural, and I understand it, and you want to look at homes. So many times you're looking at homes on Zillow, Redfin, or maybe you've even talked to a real estate agent and they put you on their drip list. So you're receiving homes every single day that fit your criteria. Now, it's very easy to get excited. You want to go look at these houses. However, you've missed and skipped the most important part. You don't even know what you qualify for yet to buy a house. If you're paying cash for a home, you can skip this video. Maybe check out one of my other videos talking about the real estate market. This may be more helpful to you, but for those of you that are financing, keep watching to the very end. You skip the pre-approval, which in my opinion is the most important step in the entire home buying process. The reason is because as a lender, we are going through your finances and we're going to figure out how much house you can actually qualify for. And sometimes the qualification is more than what you're comfortable paying. So then we have to align with your goals to figure out what is the goal with this house. How long do you plan on keeping it? Do you plan on selling in the future? Are you relocating for work? There's so many questions that come about when doing a loan application and talking to a loan officer. So this is why we really want to get to understand you, what your goals are, so we can align the mortgage and your financial goals with you and your family. Now, skipping this process and just going straight into the house can set you up for failure, and it can cost you thousands of dollars. So in the type of market that we're in today, things are still very competitive despite where interest rates are and despite what the media might be telling you. And a lot of the markets that we're working in across the country, homes are still selling fairly quickly. The ones that are priced right and they look amazing, they are now starting to get multiple offers, which means there's more than one offer on the house, and we're back to almost having bidding wars again. Having a pre-approval letter at your disposal is going to do a number of things for you. One, it's going to let the seller know that you are a serious buyer. We've had some clients that write offers with no pre-approval letter, and the seller never ends up taking the deal because they can never take you seriously. Unless you're paying cash and you have a bank statement to show that you can pay cash for the house, that offer is never going to hold any weight with a serious seller. The other thing it's going to do for you is going to let the buyer's agent, the one that's going to represent you, know that you're serious about buying a house. A lot of times our clients come to us first, we get them approved, and then we connect them with one of our top realtor partners that can get them across the finish line. So by the time we're handing you off to one of our real estate agents, they know that you've been vetted by us, you've gone through the process, we've verified your income, we've verified your assets, we've looked at your credit report, and we've gone through several strategies with you. So the agent now can focus on the one thing which we all need their help with, is finding a house. If they can't focus on finding you a house because in the back of their mind, if they're not sure that the lender can get the job done, that's going to be a crapshoot at the end of the day. And again, that can cost you thousands of dollars if a deal falls apart. Now, these two words get thrown around pretty synonymously in the real estate and mortgage world. You hear pre-approval and you hear pre-qualification. The pre-qualification doesn't really hold a lot of weight. And the reason is, more often than not, lenders are taking a phone application, or maybe you're submitting some information online to a lender and you're just putting your own information in there. Nothing's being verified. They typically don't pull your credit. They typically don't verify your income or your assets. So all the information that you're putting in, you are the one that's being responsible for. You are the one that's being responsible for the information and the input. So let's just say, for example, they ask you what your gross monthly income is. What if you put $10,000 down, but you really make $8,000? Simple mistakes like that happen all the time could cost you getting approved for your mortgage. Or a lender could ask you, hey, what do you think your credit score is? And you're looking at Credit Karma thinking you have a 730 credit score when really you have a 650 credit score. Something that simple can affect your qualifications, affect your interest rate. So the pre-qualification, despite it being fast and easy and less intrusive, it's a total waste of time. And I wouldn't encourage any of you to go down that path. If you're serious about buying a house, get pre-approved. The pre-approval, like I mentioned, we're going to take a look at your credit. We're going to take a look at your income. We're going to take a look at your money in your account. If you own other houses, we're going to look at that information. We're going to dive through everything that you could possibly think of with your finances to see whether or not you can afford the house. Now, we're not doing this, again, to be intrusive. We're doing this to make sure that once we say, hey, Kirsten, yes, you can buy a house. You can buy a house. The last thing we ever want is you shopping for a home and we're in the middle of a contract and the deal falls apart because we overlooked something up front simply because we wanted to take some shortcuts, or we thought obtaining certain documents was going to be a total pain in the butt. Those types of things and that lackadaisicalness can cost you, again, on the back end. And that's the stuff that we want to avoid. So once you're ready to get pre-approved, here's some things that you want to make sure you have handy for your lender. The most common things that any lender should be asking you for is identification, whether it's a driver's license or a passport. Then we're asking you for 1 month of pay stubs, 2 years of tax returns, 2 years of W-2 or 1099 forms, and 2 months of bank statements. That's the very least. You can see the list right here on the screen. So if anything, pause this video right now, take a screenshot, and make sure that you have this very basic minimal list to get started with your loan officer. And as a loan officer myself, if one of my clients came ready to the appointment, or maybe they had all this information handy, this makes our job so much easier because we can get through the pre-approval faster. Typically, my team will take anywhere from 24 to 48 hours to do a thorough review, and then we typically put together 2 to 4 options on how you can purchase your home. Now, if you had all this information handy, we might be able to finish the approval for you in hours. So this is where, again, once you're serious about buying, this first step, even though it might seem like a total pain in the butt, it can get you through the process so much quicker. So make sure you have these items handy. Again, if there's other items that do come up like bankruptcies, divorces, foreclosures, we may ask for additional documents, but that general list that I just gave you is the very basic that any lender should be asking you for. Now, here's a tip for you. If you're shopping around for mortgage lenders, here's the one thing that I would recommend you shopping for. I always say this to our clients: you should shop for strategy and you should shop for options. If you're shopping for interest rate, that's a race to the bottom. And to me, when you go that route, all you're doing is you're saying, I don't care about service. I don't care about anything else but the cheapest rate. Because I can tell you this, the cheapest lender on the block is not going to give you the best service. They're not going to give you the best options. All they're going to do is just give you the lowest rate. So if you don't care about customer service or anything else, then that's the way to go. But more often than not, you will care about customer service. You will care about getting a phone call back in a timely manner, having your loan officer be accessible to the questions that you're going to have. Again, that's where the strategy, that's where the expertise comes into play. And I can tell you right now, I'm not the cheapest lender out there. So if you want the discount lender, you can go find somebody else. But if you want expertise from myself, my team, we're one of the top teams in the entire country in what we do. We're ranked in the top 1%. So we see a lot of transactions, and I know where a lot of mistakes are going to happen. Not only that, but I'm an investor myself. So I want to make sure that I look at your deal the way I would look at a deal for myself. And this is where, again, we can help you get into your first home and help you start building wealth with real estate over time. So when you're talking to your loan officer, if they come back to you with an estimate with just one option, you have to start asking questions. Why am I only qualified for one type of loan? What other options are available to me to buy this house? If they look at you like you've got a third eye, you might want to find somebody else. If that's all that they can produce to you is just one type of loan, one type of option, that's very limited. And almost anybody out there that's buying a house today, you should be able to qualify for at least multiple options, at least maybe 2 to 4 different ways on how you can strategize to get yourself into a house. It's very, very rare that I ever come across a client that can only qualify for one loan and one loan only. Now, one of the biggest factors that we're going to look at is your credit score. So as we're looking at taking your application, the first thing any mortgage lender is going to do is pull your credit. So you really want to get a good understanding of what your credit score is prior to your appointment. And this is where, again, if you use a Credit Karma or Credit Sesame, those types of websites are okay at just seeing what's on your credit report, making sure you don't have any inaccuracies, making sure no one stole your credit, or you just have things on there that need to get cleaned up. Don't use those websites and relying on their credit score, because unfortunately, mortgage lenders don't use the same algorithm that they use to pull your score. So that's why you're going to have a discrepancy when you look at those websites versus what any mortgage lender is going to pull. In a perfect world, you want to get the debt on your credit report with all of your credit cards under 30% of what your credit limit is. So for ease of math, let's say you have a $1,000 credit limit on your credit card. You want to get that balance under $300. That will optimize your credit score and get it as high as possible. You won't always be able to get that in a perfect world because maybe your budget is a little tighter when it comes to buying your house, but that's okay. Most lenders can go down to at least a 580 credit score and get you financing. Now, the biggest myth is that if you have a 580, you're going to get charged some insane interest rate to buy your house, which is totally false. FHA loans, which are catered towards first-time home buyers, and the guidelines are actually a lot easier to qualify for an FHA loan than a conventional loan. So don't feel that you have to have a 740 credit score to buy a house. We've closed on a number of clients that have had 580 credit scores, 600 credit scores, 620 credit scores, that they've done very well with their house purchases and their investments over the years. So don't sit on the sidelines so long thinking that you have to have this perfect score, because if you can get into a house today and the payment makes sense, you can always refinance your interest rate down the road. You just have to have patience. Now, if you get into this deal thinking that I need to refi or I need to sell my house in 6 months to make money, then you might want to wait on the sidelines because you're only going to do yourself a disservice. I was a prime example of this. When I bought my first house, I think my credit score was probably around a 650 or so. And then once I bought the house, I started to build up my credit. I got higher credit limits on credit cards. Now I have a 740 credit score. So again, if I would have waited, who knows how many years it would have taken me to go from a 650 to a 720, and I would have missed out on the market. And for those of you that have watched my channel, you know that I bought my first house. I paid about $175,000 for it. Today, probably worth about $400,000 because the market started to come back a little bit. But still, if I would have waited, call it 2, 3, 4 years, I would have missed all that upside in the house. So this is why when you're on the sidelines, you have to look at creating a budget for yourself and really understanding what is the payment that I will be responsible for to pay for the mortgage. Don't get caught up so much in the interest rate. Look at the monthly payment. That's the thing that you're going to have to pay every single month, because that interest rate, we can always refinance that down the road once rates come down again. And that's one thing everybody in the industry is agreeing upon right now. We know it's going to happen. It's just a matter of time. So here are 4 things that could affect your pre-approval. The first thing will be your credit score. That's the first thing any lender is going to take a look at. If you have a 400 credit score or a 450, it's going to be really tough. You're going to have to look at some alternative financing in order to get into your house. So make sure you have a good grasp of what your credit is. The next thing is going to be your income and your job history. The big key that we're all looking for in the mortgage world is you have a 2-year working history. So we have to have 2 years that you've been working. You don't have to be at the same job for 2 consecutive years. As long as you have that history, that's the one thing every lender is looking at. Now with your job, we're also looking at your income, which is then going to lead us to your debt to income ratio. So based on the debt that shows up on your credit report. Now remember, all we're concerned about is the minimum payments that show up on the credit report. So we're not going to take into account your cell phone bill, your car insurance, any other type of insurance that you're paying, just what's on your credit report. So most commonly we're seeing credit cards, car loans, student loans, installment loans, and if you have maybe some payday loans, which I hope you're not doing that, because that's never a good thing to see, that you're borrowing money to pay your bills. And last but not least, we're looking at the down payment. And that's why we need your checking, savings, or retirement accounts to be able to source and verify the funds that are going to be needed in order to get the deal done. Now, once you're pre-approved, most pre-approvals last about 90 days. So you have a 90-day window to try to get into a house to get a deal done. Now, a lot of times our clients go past the 90 days. So at that point, your lender will have to update your file and update your pre-approval. So typically what will happen is they will repull your credit, and you will have to update your pay stubs and bank statements and anything that you receive on a monthly basis. And the reason why we want to see these items is because we want to make sure, one, you're still working, your pay did not change, you're working less hours. And we also want to look at those bank statements to make sure that the $20,000, $30,000 that you told us you had in the beginning, it's still there, and you didn't just take some lavish vacation and spent half your money and now we got nothing left. So we still want to make sure that the approval letter that we're giving you is still valid, not only for your benefit, but for the realtor and everybody else that's involved trying to get the deal done. Now, as we're updating these letters, here are some things that can definitely kill the deal and put you back at ground zero. Let's say, for example, you miss a credit card payment and your score drops. that could make buying a house extremely difficult. I had a client miss a credit card payment once. It dropped her score 70 points. Luckily, her score was still high enough. We could still get the deal done. But if her score was a lot lower, that deal could have easily fallen apart just because of a simple mishap. We want to make sure you're still working, like I mentioned. I had a client once, we were in the middle of a contract. We had his loan approved and he quit his job. He thought the fact that he had a loan approval, he could quit his job. But I'm like, dude, how are you going to pay your mortgage? You don't have any income anymore. So we want to keep everything as status quo as possible. So income, stability, that you're still working, you're still making money. Also, making sure that you still have money in your checking or savings account and you didn't just blow the money on a weekend trip to Vegas with your boys or your girlfriends. These are some of the crazy things that we see happen. Don't finance anything new on your credit report either. That's also a reason why we need to update your credit report. I had a client that once bought a Porsche literally 3 days before we closed on his house. So we had to re-underwrite the entire file, get some updated documents regarding the car that he purchased and the loan. What was the new payment? We had to factor all of that in. And luckily, the guy made a good amount of money. So we were still able to get the deal done. But again, if you're on a tighter budget, getting a car payment could easily kill your deal. And there was an article that Fortune recently put out. I think they said the average car payment is about $750. So if you're tight on your income to qualify for a loan and you go buy another car and you've got a $500, $600, $700 car payment, that could easily take you from being qualified to not being qualified. So throughout this pre-approval process, you want to make sure that you're communicating with your loan officer as much as possible. If you have questions, ask. Don't feel that you have a stupid question because let me tell you, I would rather take 20 phone calls a day with those types of questions than the clients go out and make a mistake and now we lose the opportunity for you to get into your house, especially where interest rates are today and where home prices are. If you can qualify and capitalize on the market where sellers are willing to negotiate, we want to be able to do that. Because if you miss this opportunity, once interest rates come back down and the rest of the world starts to buy real estate again, what do you think is going to happen? We're going to go right back to a competitive market where you as the buyer, you're going to have to pay over and above the asking price of the house. So things are going to get more expensive, more complicated, and definitely a lot more competitive. So in the market we're in today, the ball's in your court. So let's use that leverage to get you into your home. And if you're ready to get the application started, you can hit the description below. There's links to more information. Share this video with a friend who's looking to buy a house so we can get them inspired so they know what the pre-approval entails. Thanks so much for watching, and I'll see you on the next one.